Good morning and welcome to another exciting week on the stock market. Building something solid. We lean on the foundations of our strategy to see us through difficult times. It must be able to survive. Okay, we'll talk about that more as I go through today. Hi, my name is Richard Lee. I manage the Stockradar.com.au website. What we're about educating yourself by live trading examples to help you understand a bit about yourself and your trading behaviour and the elements of success that lead to controlled and clear buy and sell outcomes. The process is managed with a portfolio approach to help guide you through the implementation and operation of a stock portfolio. It's a full gamut: education, trading examples and a portfolio approach. That's what we need. When you build a structure to hold something up important like your house, you make sure it is safe. Understanding the importance of solid foundations to hold up your strategy is the same. The design, testing and implementation is an important part of the initial stage, but when you put your money on the line, your strategy must be built on the 4 sturdy pillars to make sure we have the right elements to begin with. No shortcuts, we build and we test and we tweak from there. I'm going to go through that later on in trading tactics. As I run my scanners at the moment over the markets, there's a lot of if, buts and maybes, but not a lot of guts in a lot of these stock picks at the moment, in a lot of the stocks at the moment. There's nothing much regarding trend reversals or new highs for us. There are perhaps a few early warning signs which I'll have a look at today. It's a patient time. You can't make it happen or will it to happen. We just wait for the opportunities to present themselves, and they're coming down into our laps at the moment. So that's what we're going to do. So ASX stocks, the 4 pillars of your trading portfolio. Our format as usual is to go through the background of the overseas markets, look at some the indices, go through the commodities, look at some ASX stocks, and then go through trading tactics a bit later on, putting your trade plan on solid foundations. Okay, so let's get to the markets and have a look at what we've got. Okay, Dow Jones. The story is the same. It's still going down, and there's still lots of volume there. There's momentum sags. There's been a bit of a rally. It hasn't lasted long, so there's really no change there. We've got our lower highs and lower lows. We're not going to waste a lot of time on that. Nasdaq is the same. I showed you a couple of extra indices last week to show the across-the-board environment we've got at the moment, which is of a downtrend in the markets on heavy activity, as we can see from the Nasdaq. So it's still going down. We've got S1 down here, which we can look at, but for the moment, we're being pretty careful. Okay, the commodities are interesting at the moment. Finally, we now have Brent crude starting to join copper and the weakness, and maybe even gold, and we have a look at it in a sec. So that's tested and failed the top of that trading range. It's now back going to test support down at S1, and we'll see how that goes. Volume hasn't been heavy, so we're not giving up at this stage yet. Momentum's still on the positive side, but it's certainly flattened out. It certainly seems to have run out of puff at the moment. So Brent crude is going to test S1, and we'll see what happens from there for this stage. But that's the next commodity that's joined all the others in weakening and pulling that Bloomberg commodity index down quite badly. You can see gold here. It was struggling. It's now failed there. It's now looking down to move towards S1. That's a sort of last support hope for gold. If it doesn't hold there, we're going to see further downside and pressures there. We've got a bit of selling starting to appear. There's been 5 weeks of red bars there. We've also got the momentum starting to swing at the 0 level. So it's not looking all that flash. Certainly the upside prospects are not looking good at all. Rather, the pressure is moving to the downside on gold. Okay, copper, well, that's an easy answer. It's a bit like the indices at the moment. This is just going down. It really did try after many attempts up here, copper. 3 times to get through this big R1 level. It failed. Then we saw this little area here where the average was, a little bit of supporting trend line here. It broke down through here and it's now fallen through this support here. So we've now got a good drop here. Where it goes to, we don't know. Is it going to go back to the 2020 low? We don't know, and might pull those gains out. Well, volume and momentum suggested there's further to go yet. How far, I never know, but all I know is the pressure is down, the trend is down, so I will wait for that to stop and turn around. Okay, so gold, copper and Brent are all looking pretty weak. That's why we've got stocks like BHP struggling at the moment. I'm going to have a quick look at BHP a bit later on for you. Okay, so that's the commodities. That's what they're looking like. Pretty crap, and as are the indies. So is there any hope? Well, I'm going to try and find some for you today if I can. Firstly, I'm going to go to the XJO. Well, is there a lot of hope here? Probably not. We're sort of looking at this as at this stage. Pretty clear. We got the big uptrend here. We had the failure here. It tried, failed. It's now fell below R1. A fairly serious failure there. Now we're moving down. We're not getting much there on the upside at this stage, so we really can't tell. So the pressure is still down, or the risk is still down at the moment, basis the index. Now we are specific stock traders, so that doesn't make that doesn't make up any of our decision making. It's purely background noise, as are the indices. Okay, you know how we do it. We do the bottom much. We look at the actual chart of the stock itself, and that's what we analyse, and that's what we trade. Okay, so the ASX 200 is still looking weak at the moment. I just go through our portfolio. It's down another 2 to 19 stock picks out of all the stocks I cover, of 165 stocks and 21 ETFs. So, excuse me. There are only 17 stock picks of 165 stocks, which puts the ratio at about 11% equities, 89% cash, which is where we sit at the moment. Conservative portfolio is 3 out of 20, 15% equity, 85% cash. Energizers, we still have the 5 stock with 3 stocks in it. One of them might be ALX, one of them might be something else, but there's the 3 A's there still in that 5 stock portfolio for us anyway. And the 10 stock is now down to 4 out of 10. So really, it really is a situation where the market, we're not that happy with it. It's still going down. Okay, the utility sector is the lone soldier in the positive territory on the trend intensity ratings. The full list of all sector rankings and Stockradar stock picks go to the Stockradar Trading Centre if you want to see all this stuff. Okay, so now let's get to some stocks, and that's where the real fun is. Okay, now as I said before, it's pretty hard to find anything of interest for you at the moment. It really is a waiting game and a patient game at this stage. But the good news is these things are falling and they're coming down. They'll be cheaper and cheaper and cheaper as they go down. Okay, ResMed we briefly looked at last week is showing a bit of support. You know, I'm going to go through the process of what we're going to look for, which first thing is you always look for support. So we isolated the big S1 area here for ResMed. Now we've seen the price come down to it, and the price has started to find support, and we're now seeing the buying volume here starting to improve quite significantly. The downside pressures have certainly gone out of this one here, so it's up around the average. It's a good signs. These are good signs, and I'm thinking that the health sector is an area that has come down a long way, and there are a lot of stocks looking that there might be some opportunities there. So I'm just going to cover 2 of them today. One is ResMed, which we did look at last week, and Helios again. We also looked at this last week. I'm going to show you these stocks on an ongoing basis so you can see how I follow through the process. And with Helios, I have no support here really, so I haven't isolated anything here. All I've got really at this stage is volume. It's below the average, momentum is weak, but I certainly have the buyers coming to meet the sellers. How do I know that? Because the price has stopped falling and the volume is high, which means the volume's going through, the price isn't doing much, so the buying and sellers must be roughly in balance, which is a good sign, the first good sign that we're getting buyers meeting the sellers. We need a lot more things to go by, but that's really what we want to see to start with. Trend intensity is still -7 as of last week, as was ResMed as of the end of last week. ResMed will be a bit better, Helios probably won't be. But this is the stocks that I'm looking at, and this is where I start my process to go through. Okay, so that's the 2 stocks, and the other one we're going to look at is Aristocrat, which is also, as the market hasn't been that flash, it's not doing too badly. We've isolated this area down here around the 50% level. The market is not going down. We're getting a bit of volume here. We're getting a bit of a price rise. The stuffing's going out of this a little bit, so we start to get this swing, the dominating control from the sellers to the buyers. It's happening slowly, but we need more evidence. And again, I'm fairly conservative. I wait for price action to reverse. I wait for averages to be broken, things like that, before I'm ready to jump on a trend. So I'm not looking for the actual trend reversal. What I'm looking for is the development of a trend. That's what I'm happy to jump onto. So it takes time for that to happen. Okay, so with Aristocrat, early days yet. Okay, now 3 stocks I want to look at today, which are probably of interest. Okay, now these are sort of technology stocks, if you like, which have all had a bit of a caning over the last few months. And we look at Altium. Altium's an interesting stock. It's been trading in a range for some time. Okay, so we've got this $45 down to about $25 range, and we're in the bottom of it at the moment. So it's come off a long way. It's come off $20, just over $20. It's come to this support level, which is a good support level. It's got 3 good points on it over the last 3 years. We've also got a little bit of volume now starting to appear. Remember I talked about Healy's, when the volume goes up and the price doesn't move much, you've got the buyers and sellers in balance. So we're hoping that the seller control may now have dissipated, and we've now got the buyer-seller balance coming back a little bit more into play. So we can just see the prices stop, bit of volume. This hasn't really done too much yet. The average is still above, so early days yet. But when you look at these other two charts I'm going to show you, which are in similar windows of operation, you'll see what I mean. So the likelihood is Altium is going to return to the top of its trading range, but I need more evidence yet to tell me that that's going to happen. Okay, the next one I want to look at is in that sort of world again, Next DC, which we did make a lot of money on in this last run up during 2020, but since then, really nothing much has happened. It hasn't gone through the highs yet, and it hasn't broken through the support. Well, it has just broken through the support, but the selling seems to dry up down here. So although we've got selling in this downtrend from the highs here, we're now noting when we get down to these levels, when we get up here, selling starts to appear. When we get down to here, it seems to dry up, and the buyers seem to be able to push it back up again. You can see these big green bars. Each time after we get a low here, it drives the thing up. So we're getting that balance coming back into a game. A bit of volume, a bit of red and blue stuff going on here, but I'm just trying to build evidence. I'm not saying this market is going up tomorrow and it will not stop. I'm just saying this is something for you to look at, because we're trying to observe and be patient at the moment as to what we're doing. So this is my area of interest, where the downtrend line is, where this moving average is, and where this high point here is, which is the rally between the two lows. That's the trend reversal area. I need some more evidence yet, like broken moving averages and things like that, to get my trend intensity up. It's still trend intensity rating -6 at this stage, but it looks very interesting, Next DC, because they can move when these stocks want to move. And I know we're in a bearish market at the moment, and no one's got a lot of appetite for risk, but when they do have appetite for risk, these are the stocks that are going to go. Okay, so Next DC is one to go on your watch list and watch. And the other one in this area, Technology One. Again, you see this similar price action that we're getting here. The selling gets down to here, it then dries up, the buyers then bump it up with a couple of good little green bars, and then it stops again. So we've got that balance going on here of the buyers and sellers. It's within a range and it's stuck, and until it sort of breaks out of that, we don't know much. If it breaks down, I don't really care, it falls down low. If it breaks up, I'm interested and I want to buy this stock because it may well go higher again. So this is the area of interest for Technology One. We've got support coming in here. Again, nothing really evident, but there's a bit of interest there. This is certainly saying that the selling is negated a little bit now, and the moving average is also now it's starting to turn flat. So trend intensity is -4 for Technology One. So there's 3 techo stocks. I know the Nasdaq's going like this at the moment, but they're for 3 techo stocks that aren't going like this at the moment and are showing signs of support. Keep an eye on them. Because when things look so bad at the moment, it's amazing how things can turn around very quickly, and all of a sudden people want to start buying again. So we'll just wait and see what happens. So there's 3 interesting stocks for you to have a look at. I want to also now, because there's not a lot of stock, I mean I've got my stock picks, but there's not a lot of evidence there of other stocks coming on board at the moment, apart from those ones I showed you. There's a couple of stocks actually outside my area, just thought we might talk about and have a little look at today, because there are a couple of little stocks which again are in this sort of technology area, which are quite interesting and have done quite well over the years at times. The first one is Data 3, which, as you can see here, from $1 up to $7 during 1920 was a pretty remarkable move. It hasn't really corrected that much, so it hasn't come back down like a lot of the smaller stocks. It's come back down here to about $4.50, but it's held here. It's rallied and it's come back down and it's held here again. So I'm getting this support area through, which I'm going to watch closely. Okay, so the other things I look for now is volume. Well, not a lot really telling me much happening to here. Okay, and then I'll probably look for price action, nothing much is happening here. Then I will go to the moving average and momentum. It's all not looking all that good. So the early days yet, but interesting to observe because we are at a major support level. If DTL breaks below S1, we let it drop further. If it holds there, a trend reversal may develop, so we follow that process until told otherwise by a break below. So we're now in a situation we're starting to follow development of potential trend reversal to happen, trend reversal up, and so that's what we're looking for in Data 3. Just early days yet, but good sign of support, and it's held up very well during this bearish market. And if we go to another stock in a similar business, which is Hansen, similar thing here, it's come back to big long-term support level, which you can see there, and it's held there twice, earlier this year and now. Not a lot of volume again. We can see the selling's going out of it. A bit similar picture again. and the moving average is also being tested. So we're getting a few of these things starting to pick up. What I'm not really seeing is a lot of buying interest at this stage. So it's good that it's being supported, and that's good on low volume, and that just really means that the selling is drying up down at these points here. Okay, so it's ripe for a turn, and this is what is developing at the moment. The process I go through when I look for this sort of stuff, is I look for support, then I look for some volume action, then I look for some price action, then I want to confirm that with moving average probabilities and momentum crowd behaviour action. So that's just a simple process I go through when I'm working these things. Okay, so that's a few stocks for you to have a look at today. You know, you've really just got to be working on your trade plan, getting that right and getting set for when the opportunities arrive. What I'm going to show you quickly now, a lot of providers haven't adjusted the BHP share price yet, and my provider hasn't, so I can't show you that. I think they're based in Holland, and I don't know if they care too much about Australia, but every now and then I email them, tell them to fix it up, and they do it. But for the moment, the chart isn't quite right. So I'm going to show you my little chart, which I have on my website, to show you what BHP looks like at the moment. So you can see here, this is BHP. The highs now represent up around 47.50. Okay, which is tried a couple of times and failed there, okay? Now we've come back down here, and over the last month or two, or quite a few months, we found good support down at $40. But all of a sudden now, we've now got copper diving and crude diving, and we've now got BHP diving. So our world-class asset stock, BHP, is going down, and that's not a good thing, but it's good for us because we're not in the stock and we can buy this at cheaper levels. So where am I looking now? I'm now looking down around here at $32 as the next stop of support. It's broken 40, and failing that, you're looking down at 22, God forbid. But we'll just take each step at a time. At the moment, we've got a bit of selling here, and it looks like it might move down lower yet. In the light of what's happening in commodities is probably true. So BHP is an interesting stock, but we're not ready to get into that one yet, and you find a couple of other stocks are looking like that as well. Okay, so that's BHP. I talked about the process. And the top 50 stocks have hit the radar this week. 2 top 50 stocks have hit the radar this week with alerts being sent to our members, and that's how we do it. So there's a couple of stocks that are ahead of the curve here, which I haven't shown you here today because they're for members only, but these 2 stocks I send alerts out to notify them, and they can watch them and get ready to trigger them when Stockradar sends the trigger to them. So that's how the system works and how we support our members at the moment. Okay. So that's stocks, looking at the overseas markets. Now I want to just go into trading tactics and talk a little bit about our strategies and how important it is to build it on solid foundations, okay? And this is a very simple thing. I've gone through a lot of this stuff over the years or months and this sort of stuff, but I'm just trying to clarify into some simple 4 pillars at the moment. So I'm putting this into the 4 pillars of a trading model, if you like, okay? So putting your trade plan on solid foundations, which is vital. The solid foundations really is the 4 pillars, but the solid foundation really is a capital management side, looking after your money, okay? And that really is one of the driving forces, one of the big pillars of this strategy, and I'll talk about that in a second. The first pillar is the trading system, what I talk to you about all day, the process I go through, the buy-sell rules, what I'm looking at, volume, how my MACD is looking, am I getting set for a trend or not? So this is all the trading system, the extra stuff that we love to do. This takes up about 10 or 15% of my time. Okay, the rest is managing portfolios, okay, setting my stops, monitoring all that sort of stuff. So this is the easy part, really. And most people think this is the major part. It's not. It's the minor part. It's easy to build a trading system that works. It's a matter of managing it through ups and down times like now. So buy and sell rules is pillar 1, trading system. Pillar 2 is risk management. How are you going to protect your capital and how are you going to take your profits? And that's key. I try and protect my capital by limiting my risk to X amount, and I never take any more. If I do decide to take any more, so I wouldn't take any more. If someone did decide to do that, they can end up being down, and we know how hard it is to come back from losses. So I limit those to a certain amount. I'd rather get out and move on and wait for this sort of thing to happen, which happens every now and then. So we're not caught in this one because we've got out of our stocks and we're waiting for this to happen. So now, and then there's the profit-taking strategy. How do I take advantage of a strength in the market? Because I'm a momentum trader, so I've got to take advantage of that strength via my trailing stop loss, which is what I do. Okay, or my trailing stop profit, hopefully. So that's my second pillar, managing my money, making sure I don't lose too much, and making sure when I make money and don't give it all back. Okay? Pillar 3, trade plan. Rules that govern your strategy outside your trading rules. There are things outside The actual trading system will govern how you trade. What stocks are you going to cover? How many are you going to cover? What's your allocation to each buy signal going to be? There's lots of things that you don't want to be making decisions about on the run. You want to have them all set in stone. So it's like 1, 2, 3. This is what I do, and that's what I try and do with my portfolio services, to get people to understand the process of what we go through. So pillar 3 is a lot of the governing rules. I don't want to be making decisions on the fly. Okay. Pillar 4, and even for seasons trader, this is probably the weakest link, is discipline. Because we all think as humans we have egos, and we all think we know better than the market sometimes. But sooner or later you learn that you don't. And when that penny drops, then you're probably going to make a success of it. Because trying to outsmart the market and think, well, this price shouldn't be, BHP shouldn't be down here, it should be up here. No, it's here, and that's there for a reason. So we've got to follow these things and understand them. So discipline to make sure you implement your trade plan correctly. And that means those 2 difficult things is taking profit when you should and taking losses when you should. How many times do we second guess both those parts of our trading plan? And they're the 2 most important parts that you should not second guess. Okay, so take all signals, you always do that. It's the motive that drives your success, the discipline to implement a trade plan that works. Okay, and we've got a trade plan that's worked for over 19 years, and even through difficult times, we lose money sometimes, we make money, but we make more than we lose, and that's what a trade plan should do. Okay, so that's it. If you can master these 4 elements, you have the foundations on which to build a successful trading strategy, and your house will stand forever if you do that. So you can do anything, it's just a matter of putting a pen to paper and doing it. Okay, so that's a bit about just your trading model and just making sure you've got those 4 elements in place and make sure you implement them all properly. Okay, so that's trading tactics for today. ASX stocks. What's happening at Stockradar? Not a lot this week. The newsletter came out last week, which was a biggie. And I think that's about all for news at Stockradar. Just to finish off, having gone through all those stocks, we can see we're in dire straits at the moment. We shouldn't be panicking. We should just be waiting patiently. We should be enjoying this period, not finding it a disaster. Okay, basically we should be out of our stocks, the stocks that are going down. We are in challenging and testing times. Are you up for it? Are you up for the fight? Because this is the reality of stock trading, ups and downs. You take the good with the bad. My real excitement now comes from watching these big stocks plummet, like BHP, that we do not hold, keeping us waiting for the wonderful opportunities that lie in front of us. Okay? Because this market will turn. All of a sudden people say, oh, this is going up, and we're going to be ready for them. Be smart and focus on those opportunities and have your process ready. Know why you buy, and you'll know what to buy. It is that simple. We'll give you the heads up on Stockradar when new trends start to emerge again on the basis of our why you buy rules and processes. Okay? Because I know why I buy. Let's just pretend interest rates rise and this clubs inflation, and suddenly interest rates steady, and the market, realising interest rates aren't going higher, suddenly takes off again. It could happen. Entirely plausible, and there are lots of other possible scenarios which often we don't buy into until the crowd does. And then it's the wrong thing to do. So all I'm saying to you here, there are possible scenarios. We all think of various scenarios, interest rates going up, inflation going up, commodities going down. Well, the things have got to change at some stage, as they do. Maybe Putin dies, maybe Russia pulls back from the war, maybe interest rates stop. There's lots of different things that might happen to change what we're doing at the moment. So we just got to be ready. You have to stay ahead of the curve. So we let price talk to us and trigger any new entries when they hit our radar. The trades are all updated weekly on Stockradar and then monitored closely throughout the trade. Trials are free at Stockradar. Excuse me, I'll try that again. Trials are free at Stockradar for you to take a 2-week sneak peek at what we do, and perhaps more importantly, how we do it. Okay, stay safe, watch your trends, heed your stops, and I'll see you all next week.